welcome to Ecom Insiders Podcast. This is Debbie, and the event is being sponsored by SPCTEK. Today's topic is essential bookkeeping metrics every marketplace seller should track. Our guest is Nathan Hirsch, and he is the founder. He's actually entrepreneur and is on a mission to make entrepreneurship simpler for millions. Nathan is best known for co-founding freeup.net. In 2015, with an initial $5,000 investment, he scaled it to $12 million in yearly revenue and then had it acquired in 2019. Today, he owns a portfolio of companies with his partner, Connor. A few of you might know are Ecombalance, Accounts Balance, which is 2 monthly bookkeeping services, and Outsource School. This is access to Nate's hiring process and SOPs, and Trio SEO, a premium blog writing service. Nick has appeared on over 900 podcasts, so I'm really excited to have him here with me today. And you can follow him on social media and his website, nathanhirsch.com. Well, thank you, Nathan, for joining us today.
Yeah, thanks so much for having me. I really appreciate it. It's always good to talk to other people in the e-commerce space.
Yeah, the people who watch, I think, like to see so many different facets of ecom. Unfortunately, I think accounting and bookkeeping may not be one of their favorites to talk about. So I'm excited to have you kind of energize the audience a little bit today on just, I think it's neglected. They probably don't pay enough attention to it. So let's talk a little bit about, I've got a few questions for you. From your experience, what financials are the most important to know and follow if you're a business owner?
Yeah, and I mean to address your first comment, I mean most entrepreneurs they don't love the bookkeeping, the accounting side of it, but the good news is you don't have to do it. You shouldn't be doing it. Entrepreneurs should not be doing their own bookkeeping. It doesn't matter if you're just getting started or you're an 8-year veteran. It's a terrible use of your time. Your time can be spent growing your business, adding new products, new sales channels, stuff like that. And even if you were a CPA or a bookkeeper in a past life, I would argue it's still a bad use of your time. If you're not a bookkeeper or CPA, 99% chance you're doing it wrong and you're just gonna have to pay someone to redo it anyway. And that was my experience. I've sold 25 million on Amazon, and I tried doing bookkeeping myself. I tried hiring college kids to do it. I tried dumping it on my CPA at the end of the year. And finally I realized, hey, I need to have a monthly bookkeeper that gets me 3 reports to answer your second question. The income statement, the balance sheet, and the cash flow statement. These are the same reports for any business, whether it's e-commerce or your own. And as an entrepreneur, while you don't need to take a course on QuickBooks or even know how to log into QuickBooks, you do need to learn how to read these 3 reports. And it's a good life skill, whether you're building your own businesses, investing in businesses, buying stocks. These are the 3 reports that you have to know how to read, and e-commerce is no different.
Yeah, so I know you had some businesses, you've sold them and stuff. Tell us a little bit about how important are those financials if you plan on selling your business in the future?
Yeah, one of the best decisions we ever made, and this was coming off the Amazon business where we kind of neglected bookkeeping for years. We had this idea to start an e-commerce hiring marketplace, FreeUp, and we hired a bookkeeper from day one, before we were super profitable, before we had really proven the concept or built anything out. And not only did it help us make good decisions early on based on what the numbers were really telling us, when we got to 4 years later and to sell the business and had interested buyers and started due diligence, it is the reason we passed due diligence. We had clean books going back to day one, and we knew our numbers inside and out because we had been reviewing them every single month. And that built a lot of trust with the buyers. When we had those initial calls and we answered their questions, and then they actually got into the books and looked for themselves, everything they saw in the books matched everything we told them on the call. That built a lot of trust and helped us pass due diligence.
Yeah, I think that when it comes to accounting and bookkeeping and stuff like that, that people really aren't thinking about exit strategies. So to hear you say that before you even started the business, you were already thinking about what was important for you. And that's what a good set of financials can do. Let me ask you, how do you track your monthly sales revenues from various marketplaces?
So when we started Ecombalance, we did a lot of testing of different tools. There's Link My Books, Connect Books, A2X. You need a linking tool. Just connecting Amazon or Shopify or Walmart right to QuickBooks doesn't work really well. And if you're hiring or interviewing a bookkeeper and that's what they're doing, or even worse, they're just looking at Amazon, let's say sales reports and just adding journal entries to QuickBooks, run. They don't understand e-commerce. You need that connecting tool. And through our testing, we're looking for a few things. Obviously, accuracy is important, but we need good customer service. We need any bugs to be able to be fixed quickly, how quickly they do that, and then how easy it is for our bookkeepers to use. So we started using Link My Books, and that's our go-to tool. So if you're an e-commerce client and you sign up with us for bookkeeping, Link My Books is included in our price. We use it to connect to all marketplaces. It's required, and it pulls in the data and it matches the sales in your QuickBooks with the different sales cutoff periods, because every Amazon seller has these different cutoff periods. But then it also tracks refunds, returns, different Amazon fees, and breaks them down. And just another way to kind of know that whether your bookkeeper understands e-commerce, if the money deposited into your bank account is the top line of your income statement, that's incorrect. If you think of a profit and loss statement, the top line should be your Amazon sales. Then you've got fees, refunds, returns, all that stuff. And then you've got the money deposited in your bank account. And having that connecting tool, Link My Books, allows that to happen.
Yeah. So if somebody's looking at their books, how do they find or identify those areas for cost savings and just improving overall profitability? Because everybody thinks, oh, there's no place I can cut costs, there's nothing I can do. What are some of the things that you would recommend to a client?
Yeah, so we have this monthly finance meeting. If you go to ecombalance.com/agenda, it's our monthly finance meeting agenda. And it's the same meeting that Connor and I go through every single month. And we have a whole portfolio of companies. We do the same thing every single month for every company. We've been doing it for 7 years. And really, what we're looking for is trends. We're looking for this month compared to last month, and this month compared to the same month last year. Are your gross margins and net margins going up? Is your payroll and other expenses going up or down over time? Are your sales on different channels going up or down, associated with how much time you're spending on these channels? So many sellers, they're so obsessed with that shiny object syndrome, whether it's TikTok or Amazon UK or whatever it is. But when you look at your actual margins on those marketplaces, it's not worth the time and the energy and the resources you're putting into them. So every business is a little bit unique, but a great starting point is comparing this month to last month and the same month last year, and then going line by line down not only your income statement, but your balance sheet and your cash flow statement as well. Because there's a lot of sellers that go out of business not because they're not profitable, but because they run out of cash. So a lot of people,
Mm.
they love looking at the P&L. How much profit did I make? That only tells part of the picture of your business. You need to see, hey, how healthy is my business from a debt and assets perspective on the balance sheet, but then also how's my cash flow looking every single month.
Yeah, cash flow. I remember working in a small mom and pop business with them, and they didn't have one when I first got there. So I was really excited when you said of the three reports to also have that cash flow because it is often overlooked. And people just think, oh, I look at my P&L and L and I look at my balance sheet. But yeah, you need to know what your money is doing for you or not doing for you, right? Um, what is the biggest bookkeeping mistake that you see sellers will make?
Yeah, so we talked about a few of them. Doing bookkeeping yourself, big mistake. Not using that connecting tool, big mistake. Not segmenting per marketplace. You'll see a lot of people that have a P&L that just shows everything together. You want to be able to account for like sales and COGS of that particular month. If you're buying all this inventory, you want to say, hey, I sold these products on Amazon. This is what I sold it for. This is what it cost me. This is how much I made on these products. So a lot of bookkeepers that don't understand e-commerce, they're just saying, oh, you bought inventory. That's an expense that's going on the books. And they're not actually matching up the cost of goods with the sales that are going out every single month to give you an accurate picture of how you're doing.
What should sellers be aware of if they want to exit their business in the future? Having sold several businesses, what would you give them advice on?
Yeah, so I've sold one business, just to clarify. But the biggest thing, I mean, clean financials is huge. And well, I mean, we have this exit playbook. If you go to nathanhirsch.com/exit, and it's everything that we do to set our
Mm.
businesses up to be sellable from day one, even if we don't want to sell it. It's just creating a really good business. But it also kind of talks about what we learned going through due diligence. So this is what buyers care about. They want to see obviously clean books and financials. They want to see growth, right? If your business is starting to go down or even stabilize, that's not a great time to sell your business. You want to sell it when it's on the up and up, which becomes a dangerous game to play because that's when people don't want to sell their business, when things are
Yeah.
going well. But that's really when you want to get into conversation, sell your company. Good SOP, standard operating procedures. We teach a lot about that in outsource school. You should have a process for everything. This is how we run ads. This is how we handle returns. This is how we work with suppliers. Like everything should be documented. A good core team that can run the business without you, where you can leave for 2 weeks and maybe the business doesn't scale and grow, but it doesn't go under either. Everything gets fulfilled, everything gets done. That's really what you're looking for there. And then ideally different revenue channels. And I know that's hard for an e-commerce seller, but it's tough to buy a business when all your sales are dependent on Amazon. In the perfect world, yeah, you're getting on Amazon, but there's also Facebook ads and Shopify and other platforms, and you're not just getting ads for one, or you're not just getting sales from one direction. People want to see a diversification in clients. For the business we sold, we got sales through referrals, and we're getting content and SEO and all these different ways that people were coming to us. And it's kind of the same thing for e-commerce. The more channels you have, the better, and just diversification. And that could mean of products. Like if one product's doing well and the other ones aren't, could be marketplaces. You want it to be as diversified as possible and not have a big percentage all in one thing. For my business, like we didn't want to have one client that was 70% of our revenue. And it's kind of the same thing in e-commerce. You don't want to have one product that's like that either.
Yeah, and coming from an agency perspective, I can tell you that somebody who only has Amazon, if their top producing ASIN gets deactivated or their account gets deactivated, I mean, you are then, I mean, in a huge problem. If you don't have money that's been put back for payroll, then you're like, how do I pay people and stuff like that? And, you're kind of at the mercy of these marketplaces when it comes to some of those things. Like, how long does it take to get reinstated? As long as Amazon wants it to take.
Right.
I mean, there's no formula that says you can be within 2 hours, 2 days, 2 weeks. It takes however long it takes. So I think that's really solid advice. Thank you for that, Nathan. I appreciate that. Tell me, what is the difference between a CFO, a CPA, and a bookkeeper?
Yeah. So when people talk about accounting is kind of the big umbrella that everything falls under. And you really need at least two pieces of accounting, maybe a third piece. So you've got the bookkeeper and the CPA or tax person. If you're in another country, it's not called the CPA. And then the CFO, which more comes into play when you're maybe over 5, 10, $15 million a year. Now, the CPA, their job is to help you with entity setup. Should you be an S corp, a C corp? What state should you register in? Filing your taxes, tax strategies. All that falls under the CPA. The monthly bookkeeper, they're the ones that are actually working in QuickBooks and Xero. They're providing you income statement, balance sheet, cash flow every single month. They're categorizing transactions. They're making sure everything is recorded properly. And then they're passing it over to the CPA at the end of the year to actually file your taxes. And then you got the CFO. The CFO is there to help you make business decisions with those numbers. They review income statement, balance sheet, cash flow with you, and they help project out sales, project out cash. Should you hire more people? Should you spend more on ads? All of that comes into play with the CFO. So it's really important that you go to people with the right things. Like you shouldn't be asking your bookkeeper whether you should be an S corp or a C corp. You shouldn't be
Mhm.
asking your CPA to do your books at the end of the year. You shouldn't be asking your CFO to provide your income statement for you. Make sure that you're using each one correctly, but they should communicate. Whenever someone signs up as a bookkeeping client for Ecombalance, we always get their CPA and CFO's contact information if they have a CFO, so we can communicate directly. We want to be on the same page at all times. We don't want to do all your books and then find out that you didn't tell us what state you're in or what entity it is, or your books are on cash or accrual or whatever it is. We want to be on the same page from day one. So make sure you at least have a good bookkeeping service and a CPA, and then the CFO can come into play when you get a little bit bigger.
Yeah, I think that's really sound advice. So tell us a little bit about Ecombalance and what roles that you actually play and how you help ecom sellers.
Yeah, so Ecombalance is a monthly bookkeeping service that we built after our exit because we saw how important monthly bookkeeping is. We do one thing, monthly bookkeeping, charge you on the first, books by the 15th each month, income statement, balance sheet, cash flow statement. You can grab a sample report of what you get if you go to ecombalance.com/report. And we can obviously help with catch up and cleanup work as well to help you get to that current month. But the beauty of us is I'm not a bookkeeper. My business partner's not a bookkeeper. We have a great team of bookkeepers led by our CFO who has 30 years of experience. But we're good at the things around the bookkeeping, the customer service, systems, processes. Everything we do is designed to be as efficient as possible because we're entrepreneurs first and we're sellers first. We speak
Mhm.
sellers, we understand what sellers want in a bookkeeping business, and that's what our service is all about.
So let me ask you this, when you said you just exited your ecom business, is that what led you to starting Ecom Balance? I mean, what put you in that direction?
So the Amazon business, we sold about 25 million over 6, 7 years from 2008 to 2015. That business we did not sell. I mean, we got in early. It was a great business at the time, but we weren't selling our own products. We were working with a lot of U.S. manufacturers that eventually went on to sell themselves. But we learned a lot about business, and it was a great opportunity. The second business, which was an e-commerce hiring platform, that's what we ended up selling. Free up. We got that to about $12 million a year, sold to the Hoth in 2019. And even though that was not an e-commerce business, we work with a lot of e-commerce sellers. It was all e-commerce sellers hiring freelancers, VAs, agencies, all through our platform. And we had been in the e-commerce space before. So after seeing how important bookkeeping was to that exit, we created a monthly bookkeeping service to help e-commerce sellers because that's the space we're in. That's what we know really well. After that took off and did pretty well, we actually launched a second bookkeeping service, Accounts Balance. That's a slightly cheaper price point because e-commerce bookkeeping is more complex, but it's more for agencies, service providers, SaaS, real estate. It can handle non-e-commerce businesses, where the e-commerce one is more e-commerce focused. So just being in the e-commerce space, seeing what a disaster our books were with the Amazon business, cleaning that up for the second business, going through a sale, past due diligence, seeing how important bookkeeping was, that's what gave us the idea to start a bookkeeping business.
Yeah, I think that that's wonderful to hear the whole experience, the journey and stuff like that. And I think for anybody who's listening or watching today, it is really important for you to understand the importance of like what he has discussed, whether you are thinking of exiting or you just want to really scale the business, you need to understand it from a financial perspective. And I think that that's what Nathan is telling us today regarding Ecom Balance. If you're looking right now at your books and you're going, I don't know, this is a mess and stuff, I would recommend that you, and the website is ecom with one or two M's.
We actually own both domains, so if you go to either one of them, it'll go to one and the same place.
Oh,
But the actual
now
brand is
that's a
one
clever entrepreneur right there, right?
M.
Get both of them. Is there anything else that you would like to tell us in parting today, Nathan, that we should be aware of when it comes to ecom bookkeeping?
Yeah, just make sure you hire people that understand e-commerce, a bookkeeper that knows e-commerce, a CPA that understands e-commerce, and a CFO that understands e-commerce. Where other industries, like maybe if you understand agencies, you can work with the SaaS company. E-commerce is not like that. It's very complex. You don't want to be the first e-commerce client your bookkeeper's ever had. Find someone who knows the space, who's been in the space, and you'll be a lot better off for it. And yeah, really appreciate you having me on.
Well, thank you for joining us today on Ecom Insiders, which is sponsored by SPCTEK. Again, our speaker today was Nathan Hirsch. If you have any questions, you can leave them in the comment fields below. And if you enjoyed today's session, please subscribe to get future editions of Ecom Insiders. Thank you again, Nathan, for joining us and talking about the importance of ecom bookkeeping.
Thanks for having me.